tuning in to Purse Empowerment TV. I'm your host, Shani Curry St. Ville, and we're about to have a really good conversation with one of my purse partners. Now, you guys know there's like some differences, right? So I have sis, right? You know, I have sis, and all of you tuning in, you're my sis, right? You're my sis, right? And then I have my purse partners. Purse partners are people that I work together. They're part of my center of influence. They help me to assist my clients in purchasing real estate property, whether it be an investment property, whether it be their first property, whether they're buying their second property, whether they're getting multifamily, whether they're getting a duplex, whatever it is that they're getting. I have a few partners that help me make that possible once I help my clients improve their credit scores. So the individual that's hanging out with us today is someone that I've had a long-standing partnership with. Whereas in I help my clients improve their credit scores. Sometimes she sends me clients that need help with improving their credit score so that they can move forward. But she's going to be specifically talking about a 5% grant that's offered in Lee County. So she's going to talk a whole lot about that. But I want to share one thing with you guys before, right? Because under COVID, sometimes your attitude, your mood, your creativity can sometimes get bogged down, right? Just the mask alone, just the math alone, right? That in and of itself is quite the process for me. So I want to do something for you that I always do right at the beginning of the show. So I want you to open up your spiritual purse. I want you to open up your actual purse. I want you to, if someone's getting on your nerves, just open up in your mind, just open up their purse. Maybe if they were getting some more money, sis, they might be feeling a little different. All right. So whoever purse you're going to open up today, we're going to go ahead and give them some of this money, honey. You ready? Open it up, sis. Open it up. Even if it's your bank account, sis, open it up, because I'm about to make sure you feel a little bit richer. Oh, totally worked. Totally worked. All right, so that's what, you know, that's how I start my morning. I like to start my money just, you know, in my mind, right? In my mind, getting the money. All right, so let's go ahead and bring on Melissa. Melissa is going to be talking about how to get 5% of your purchase price towards your first property. So we're going to bring Melissa on. Hey,
how
Melissa,
you doing?
Did you grab up any of that money?
I got it. I got it all, actually. I claimed it.
Good. First you see it.
So anyways,
you can.
Yeah. My favorite book is Think and Grow Rich, for anybody out there.
I read that book at least once a year. I've been reading it for a decade now. You too? Yeah, I've been reading it for a decade now because I see as I grow in my perspective that some of the content makes more sense and it has more relevance. Yeah. I just read it once a year. There's a few books that I read once a year.
And just the monetary confirmation of you need a certain amount of money by a certain day. And what happens is that by the law of attraction, you start attracting that money to come your way. Mm-hmm. So I want to tell everybody today about free money in Broward County. How does that sound?
Yeah, totally, 100%. All right, so let's get to talking. All right, so the first question that I want to ask you, Melissa, is just tell us specifically about the particular grant that's attached to the 5%. Just tell us about that one first.
Okay, so pretty much it's called the Lee County Grant, and it's the state of Florida grant. Okay, so the state of Florida separates money for first-time home buyers. So with this program, you don't necessarily have to be a first-time home buyer. You just cannot own two homes at the same time. So for example, if I own a home today and it's a small apartment and I live in Broward County and I want to move into a bigger property, I can still sell this property and still qualify for the Lee County grant. Now, what is the Lee County grant? The Lee County grant encumbers West Palm Beach. It encumbers Broward County, Lee County, and a bunch of different counties. And they give you at closing 5% of the purchase price. So on 300 grand, that's $15,000 that's given to you for free at closing. And it really isn't hard to qualify. All it is that one, you can't purchase a property for more than $320,000. Two, you have to have at least a 660 credit score, and you cannot make the maximum amount, which is $120,000 per household. So it's got to include your wife, et cetera, et cetera. But this is awesome for anybody that's making less than 130, 100 grand a year, 120 grand a year. You're getting $15,000 as a gift at closing.
Okay, so Melissa, you just mentioned that, so the income limits is $120,000. Now, okay, so does this particular application speak to those parties that's applying for the loan, or does it speak to those that are applying for the grant? Is that how income is calculated?
It's for the loan. The income is for the loan, but
okay.
And the grant is not separate, because what'll happen is that I do the pre-qualification. I fill out your loan application. I look at your documentation to make sure that you qualify. And as long as you're on your tax return, you're not above the limit, it's household, it's in between you and your wife, then you're fine.
So what if the husband is not going on the application due to credit issues? Does his income no longer factor into it? How does that work?
No, they're going to look at the household income.
Despite
even though the wife is exactly.
Got it. So despite who might be going on the actual loan, income is qualified based on total household income. Just wanted to qualify in that. Okay, so but it's $120,000 of combined or single income.
Correct.
All right, cool. All right, so you said that the credit score is 660 in order to qualify.
Correct.
Okay. All right, so my next question would be is, ideally, who would you say are the ideal applicants for this particular grant?
Well, people actually who don't own a home now, who are legitimately first-time home buyers. That's what this program is designed for. Or somebody that, hasn't owned a home in 3 years. Mm-hmm. That's really who it's for. Now, basically, the whole thing is that some people don't think that they can qualify because they don't have enough, the 3% for FHA, the money for the closing costs, the whole thing that you need to become, the whole amount of money that you need to be able to purchase your first home. But to be honest with you, it is so easy. It amazes me. Every time I pre-qualify somebody, they're just in awe because they don't believe that they're going to be getting this much money. So really, technically, you only need like $5,000 or $6,000 to purchase your $300,000 home.
Okay, so let's break down that. Yeah, let's break down that language just a little bit. Okay, so FHA requires 3.5%.
Correct.
For you to make a down payment. How much of that 3.5% can be outside sources? Does that entire 3.5% has to come from your own money, or this loan can qualify you towards that 3.5?
That's what happens, is that the 3.5% that you need for your down payment, this 5% can go towards your down payment and towards your closing costs.
Wow.
So if you get a really good realtor, the realtor can get the seller to help you pay for some of the closing costs, and you can literally walk into a property with no money down.
That's incredible.
Now, technically, you should have some of your own money, you know, $2,000-$3,000, because you don't want to be after closing without money. But this is an amazing opportunity for somebody who's been sitting on the fence. You know, I just haven't been able to save enough money for my down payment. And, you know, it's like home ownership is out of your reach. But this is just an awesome, awesome opportunity for first-time home buyers.
Yeah, I like the fact that you clarified that your 3.5% can the grant can actually qualify for it. So that's really, really good. My other question is, how has COVID impacted this application process and the availability of money? How is that being impacted by COVID?
Well, the main impact has been on the credit scores. The banks are now requiring higher credit scores. So is Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac are the entities that buy loans in the background. FHA is a government-backed loan, so they also raised the requirements. So that's how COVID has impacted. The other thing is that self-employed borrowers, it makes it just a little bit harder on self-employed borrowers, but that's, you know, they want to make sure that throughout COVID, your business has been able to run smoothly. But otherwise, you know, anybody that's in the mortgage business now is super busy, with all, you know, because of the low interest rates. I mean, we've got historic lows, 2.875 on a regular mortgage.
Yeah.
You know, on a 30-year, it's crazy.
Right. Okay, so you said that the credit score to qualify for this Lee County grant is 660. So if you have the 660 to qualify for the grant, but you are not meeting the standards for Fannie and Freddie, how is that working out? Like, what type of issues is that posing?
Well, no, really, if you've got the 660 credit score and you have the income to qualify, as long as I can run it through the engine and I get what we call a DU approval, you're pretty much approved for the program.
Okay.
Because we don't send it to the program for you to get approved. We underwrite, my company underwrites the program in-house. So if I give you a pre-approval, 9 times out of 10, you're going to get approved.
Got it.
I mean, something in the background has to come up, like maybe a foreclosure or something that we didn't know about. But it's not that. I'm telling you, it's super easy to get this grant money, to qualify and to get the grant money.
Okay, the next question is, you went into talking a little bit about how self-employed individuals are being impacted. What are some of the requirements for those that are entrepreneurs who still want to purchase in this market? What are some of the standard documents and requirements that you're requiring from them?
Well, most of the documents are, you know, regular, your tax returns, corporate and personal for the past 2 years. Okay. But now what's a little bit different is that they're going to ask you for your quarterly P&Ls, profit and loss throughout the year. And they're also going to ask you for the business bank statements, which they wouldn't ask you for before.
Okay.
So that's the little bit of an income, because they're going to look to see if your business has been affected by COVID. Does that mean that you won't be able to get the loan? No, they just want to make sure that you've been able to rebound. You know, so there were a lot of companies that were closed for the first couple of months. But I'll give you an example. I had a client that he does marble polishing, and he started to get, like, right after the first slow months, he started to get some big contracts, and the underwriter was able to take those contracts as evidence that he was going to continue to stabilize his business. So we were able to, thank God, close his loan fast.
So in a normal economy, you know, minus COVID, how many years of tax returns would you be needing from the self-employed?
On the bond, 2 years.
2 years. Okay.
Yeah.
So
if they're doing a regular loan and they've been in business for 5 years, we can get away with 1 year tax returns.
Okay, got it. That makes perfect sense. Okay, so what type of I was going to ask you, like, oftentimes I know I see people take first time home buyer grants or loans, and sometimes they have a little issue with getting out of the property. What would you recommend to them in terms of that? Like some things to kind of look out for when they're looking into down payment assistance programs?
It really depends on the program. Okay, so this particular program is a grant. So you're going to get this money as a gift. It's not going to be tied to the property. So as long as you stay within the property for at least a year, then after that, you're fine.
Wow.
It's a grant. Okay. Wow. Now, that's not the only program we offer. We offer different programs. So it's dependent on the program that they qualify for. Other programs go on the properties as second mortgages, and then they have to stay there for 5 years. And then the one in Miami-Dade County, it's a $10,000 second mortgage, but that stays on the property for 30 years. So at some point, you have to pay that one back.
Okay, so that just gave, for those of you that are tuned in, so not all down payment assistance programs are created the same. You want to make sure that you're paying close attention to how long you have to stay in the home for it to be forgiven. You want to look for language, whether or not if this is a gift or if this is a second mortgage. Those are the type of things that you want to look into when you're looking at first time home buyer programs. Do we have any questions from the audience? I'd like for you guys to ask some questions. I don't want to take up all of the conversation. I'm sure that I've hit like the top ones in terms of how much income you're going to need, how to apply. Here we go. We got a question. Does the type of home matter? Could I get a 4-unit, a new construction, or do I just have to hit that $320,000?
You just have to make sure that you hit you don't have to hit. You can buy anything.
Yeah, under.
Yeah. Yes. It's up to the 320.
No more than.
The only property that you're not going to be able to buy is a manufactured home. So condos, single family, duplex. They'll do up to a duplex, I believe. The fourplex is not going to be good.
Okay. Hope that answered your question. We have another question. They want to define second mortgage.
Okay, so when you buy a property, you're going to be paying what, like $1,500 a month for your mortgage. Okay. A second mortgage is a mortgage that goes behind your first mortgage. So sometimes there's a payment attached to it. Sometimes there's not a payment attached to it. So the mortgage is what gets tied to the property, and it's also called the note. It's also the mortgage and the debt. So you're going to have two debts towards that property.
Okay. I hope that answers your questions, Sayasha. Alrighty, any more questions from the audience? Because I think that we have covered a lot of ground here. We're not going to take more time than we actually need. We hit the points. You know how to qualify, you know how much your credit score needs to be, you know how much money you can get, how high the property is. I think the only thing is left to make sure that you have your credit score in check, so that you can apply. 660 is what they're looking for. And and you know what I like the most is that this grant actually hits that 3.5% for you, because sometimes, you know, you're thinking, okay, thanks for the grant, but I got to come up with $6,000, $7,000, $10,000 based on the purchase price of the home. So I really think that that was like extremely helpful. So if there's no more questions, I'm going to let you give your last notes, Melissa, and then we're going to wrap up this episode.
Well, really what I want you to do is do that little machine again.
Oh, of course, I got
So,
you. Let me
so
tell
I
you
can see the
something.
cash coming
It's
out.
nothing for me, sis. It's nothing for me. You hear me? I just want to make sure, sis, I am ready. All right,
Because I love giving free money away too.
100%. All right, I hope, ladies, gentlemen, those that tuned into this episode, I hope that we were able to add some value to you. I hope that we were able to at least put the possibility of home ownership on your mind. I hope that you had the opportunity to really start to think about being able to get into a house because there is money available to you. You know the credit score, you know how much money you need. 320, the average house in South Florida is about 350. So you're still under still under the average. You can buy a pretty decent house here.
Yeah, of course.
Yeah, and the fact that you can even start thinking about how this could even allow you to qualify for a duplex, right? So you don't just have to think about a single family. All right. So if that wasn't enough to make you feel richer, right? I want you to do what you always do right at the beginning of these episodes, because that is my only goal, to make sure that you understand the value that you have inside and how that value goes out into the world and help you create more of it. So you ready? All righty. So open up your spiritual purse. Open up your actual purse. Uh-oh. Oh my gosh. Totally. Look, before you guys open up your purses, totally, 100%. Here's the last thing. So for those of you who've had the opportunity to tune into a lot of my videos, right? I'm talking a lot about money therapy. Money therapy is a 5-day challenge, right? Well, you'll have the opportunity to eat, pray, and love when it comes to dealing with your money, okay? So eat, right? The number one thing that I'm finding with a lot of my clients is I look at their grocery bill and I go, oh my gosh, are you gonna eat the refrigerator next? Right? And I can't joke all the time because sometimes I get a little into it. I get a little heavy on the emotional eating, and sometimes I get a little busy myself. So that those type of habits is what slowly starts to creep up on your bill, right? And what I want you to do is think about, and here's a question that I want to stay inside of your mind, and I'm constantly going to be asking during the challenge. I'm constantly going to be asking you, what else can I do with this money? What else can I do with this money? What else can I do with this money, right? So when you find that you are constantly on the Uber Eats, you're constantly on those apps, you're constantly ordering out, let that mind be. The question in the back of your mind is, what else can I do with this money, right? So that's eat. Then we got pray, right? Because oftentimes what happens, oftentimes what happens during these pandemics, when we're going through these type of recessions, depressions, and things like that, sometimes our creativity gets a little stifled, right? We tend not to be able to look forward because we're so focused on what's happening right now. So a part of the challenge is pray, so that you can begin to see yourself beyond COVID. It's like 2021, it is coming. It is coming, right? And we're going to begin to prepare for it as if we're going to be there, right? That's what we're going to do. And then the other part of the challenge is love, right? So the interesting thing right now is that during COVID, love has not only been extended in a relational way as it relates to being in a relationship, romantic relationships. Relationships are being stretched across the board during COVID. People are living with people that they never lived with. People are seeing people more than they ever seen them because they used to have the escape of work. That's out, right? Used to get a little breaky break from your children because you've been dropped. Nope, that's not it, right? So we're having a lot of relationship challenges. We're having a lot of close-up relationship opportunities to grow. That's what I like to call them, right? So the challenge is going to give you the opportunity to look at all three aspects: eat, pray, love, and how it's helping you or hindering you from growing your money, sharing your money, and doing that in what you want to do with it the most. Okay, so I'm going to drop that link here for those of you who didn't sign up. It is a completely free challenge. It's 5 days of money therapy. So if you're not feeling richer after all that, sis, I don't know what to tell you, but I'm gonna ask you: open up your spiritual purse, open up your bank account, open up the person that's been getting on your nerves, because maybe they need some money, sis. Maybe if they was getting a little more money, maybe they'd be a little nicer. I don't know, but it's worth a try. It's worth a try. All right, so open up the purse and I'm gonna send you that money. You ready, honey? All right. Oh, hold on. It gets like that. It gets, there we go. Ready? It was so much. It was backed up. It was like, come on, sis. Honey. All righty. I hope that you feel richer. Next week, we will be talking about how to deal with your debt. Should you pay it or should you delay it? All right. So we're going to be talking about that. If you have any questions about that in particular, as it relates to your credit score, should I pay that debt or should I just let it sit there and see what it does on my credit score? And can I get a house with this debt or not? All right, sis. Until next week, take care.